Hi everyone, we'll go through the economic and market update for the month of May. To give a recap, we'll go through the GDP variables again, where GDP is a combination of consumption plus investments plus government spends plus exports minus imports, where consumptions is the highest part with 70% weight, investments at 2%, government spends at 27%, and exports imports virtually cancelling each other. In terms of consumption, we have two variables which are listed here. One is power generation, wherein for the month of May, the year-on-year growth in generation of power was 23%, whereas the average growth rate is at 4% year-on-year for last 12 months. However, this 23% growth is because of the low base when compared to May 2021 due to lockdown during the same month. If we take a normalized number as a base, we would end up with a 10% year-on-year growth. And month on month, there is no increase for the power generation. Coming to credit growth, credit growth basically means the number of loans taken within the country by people, including corporates. Now, for the month of April, the credit growth was at a higher number of 11% year on year, whereas the average of last 12 months was at a 6% year on year growth.
So what we can see over the consumption is that it has been positive for the both power generation and credit growth, where the current is much higher than the average what we have taken for the last 12 months or the pre-COVID time. The second factor that we have taken over here is the investments, which account only 2% of the total GDP. In investments, we have both parameters, that is the how much has been from the FIIs, that is the foreign institutional investors, and from the DII. So one thing that we note over here is that the average that they have put in was 9,000 crores per month previously, but currently at this month, for basically for the main month, there has been only 7,700 crores inflow for cumulative for the FII and DII. But however, there's one important note that we have seen over here, that there has been a huge outflow from FIIs ranging to 43,000 crores, and previously they used to put in the historical pre-COVID was they used to put in 6,000 crores, and over the last 12 months they have taken an outflow of 15,000 crores. So this is a very negative point what we are seeing from the FII perspective, where the outflows are very much higher than the historical and the average for the main one.
And in terms of investments, there is one point to be noted that the FII's total inflows for last 18 months amount to zero. So basically in last 18 months, whatever inflows were there and whatever outflows were there, combined number is equal to zero. Then moving to government accounts, which is the government spends within the country, which accounts to almost 30% of the total GDP. Now, in terms of government accounts, the government receipts, majority of the receipts for government comes from taxes, which is around 90 to 95% of the total receipts. In taxes, we can bifurcate this into direct and indirect taxes. Direct taxes would be your income tax and corporate tax, and indirect would comprise of GST, customs, wealth tax, etc. For the month of April, the government has collected 1.8 lakh crores in total from taxes, and the average for last 12 months was around 1.4 lakh crores per month. The current number of 1.8 lakhs is 41% above its above to the number which was 1 year ago. But that is because of a lower base, as mentioned earlier, because the last year during the same month, there was a COVID lockdown, which resulted into a lower base effect. Now, in terms of GST collections, which comprise your indirect taxes, the collections for the month of May were 1.4 lakh crores, whereas the average GST collections for last 12 months was 1.2 lakh crores per month. both of these both of these variables look very good when compared to its average numbers. However, then continuing with the fiscal deficit, which is your total income of the government deducted by its total expenditure. Now, fiscal deficit comes to around 38% of total receipts currently, which means that India as a whole, if they are earning 100 rupees as receipts, they are spending 138 rupees in total. This number was very high in last 12 months, averaging out to 55%, and it has dropped significantly to 38%, which is a positive factor all in all.
Yeah. So Rishabh, what we can note over government accounts is that all three are positive, where the collections has been higher than the previously average what we had. The GST collection is also at a better pace, where the numbers are basically the registrations might have been increased or the revenue is increased. So because of that, the collections have increased. And the fiscal deficit, obviously, it has come down from 55% to 38, basically 17% cut from what government was spending. The next point that we'll include is the foreign trade, that is the exports minus imports, which accounts only 1% of the total GDP. The exports is way higher than the average. One reason could be the oil, where the overall oil prices have increased globally, and since it accounts 20% of your overall exports, this has impacted the export number, and import as well as the same thing, because oil is a major part of the import in the Indian structure as such. We are seeing a high import of 4.6 lakh crores as against 3.88 lakh crores per month. So one thing that is in what overall trade deficit, what is coming is very much higher. Basically, the negative number is higher than the previously average. This is mainly because again, because of the oil prices, coal and power, where this has impacted overall on the foreign trade.
Right. So foreign trade seems to be negative for the month with a higher trade deficit when compared to last 12 months average. Now, there are a couple of other factors which do not directly contribute to GDP, but they are very essential for economy to grow. One of which is unemployment. For the month of May, we have seen an unemployment of 7.1% when compared to the average of 7.6%. So we have seen that the unemployment has gone down around 50 bips for the month when compared to last 12 months. And we have seen a higher decrease in unemployment for urban sector. And in terms of inflation, we have seen the inflation to be at a 7% year-on-year growth for the month of May. However, the average for last 12 months has been at a lower level of 6.1%. The highest contributors for this raising inflation would be your food, clothing, and fuel, which has almost a 10 to 11% growth compared to its last year's numbers. So all in all, the inflation is at a negative trend. However, unemployment, we have seen a good trend and recovery, which is positive.
So overall, on the macro performance, what we can see is the consumption is on a positive, government accounts is on the positive. However, the foreign trade and the investments are the negative, which basically because of the FIIs and the oil and the other global factors that is affecting on the macro performance. So next, what we move is through the.
So would it be fair to say that relative to last month, much better this month?
Yeah, yes, Karthik. So it would be, it would be fair to say that, compared to last month, we have performed with a decent numbers in terms of both consumption as well as government accounts. So it's a positive factor for the overall.
And this is important because it's showing you a trend of where the economy is headed.
Right.
Exactly. Yeah.
Okay, let's go to the next slide.
Yeah. So this slide will take you how the comparison of the revenue and the price to earning for the top 500 companies across from March 2020 to March 2022. That is basically 2 years. So in March 2020, what we have seen that there was a first lockdown of 10 days, and since at that time the revenue dipped by 2%, but the PE were ranged at 22. And however, in the June where there was a major lockdown, we saw a fall of 22% in the revenue, but the PE remained higher. The reason why PE remained higher was because the EPS of the companies also went down, but the market capitalization remained the same. So the third, overall, what we are seeing is now at March 2022, the EPA, the revenue and the PE are remaining at the same level at 23, basically at a normalized level. What they were a pre-COVID at 2023 range. And so that's how we are seeing about the revenue and the PE correlation.
Right.
I think what's important to note over here is in September, even though there might have been some pent-up demand, September 2021, you had a revenue growth rate of 11.
Yes.
And in December, it's 9.
Yeah.
And in March, it's 8. A lot of this could be because of inflation, but it's also telling you that these companies have started making quite a bit of money.
Right. Yeah.
Right. Okay, that's it for me.
This slide talks about the correlation of your price and EPS over a longer period of time.
I think, Rishabh, I think a lot of people would have seen the slide.
Yeah.
I don't think we want to go through it, but we want to just, before we go to the next slide, we just want to remind everybody the reason why we look at the earnings is because we've seen over a 5 to 7 year period, the prices move directly in correlation to the earnings. Right. So if you look at this graph, it says 10% at the bottom in black. It says that the earnings growth has been 10%, and therefore the price growth has also been in the 10% range.
Right.
Over short periods of time, you might see a difference, but over long periods of time, like 5 years and above, the earnings growth is going to determine where the prices land.
Yeah.
Right.
Yeah.
So we will keep showing you this every time. We are going to go through a few slides where some sort of basic fundamental needs to be kept in mind to understand what's coming in the next few slides. Right? Right. So I think we can skip this for the sake of time and just move on to the next one.
Sure. Right. Taking the previous slide as a basis, where we say that earnings and price move together in a longer period of time. We have compared the earnings versus price growth for 5 years for individual sectors. Now, what we have put down listed here are the 40 sectors which are there in BSE 500 companies, wherein these are sorted out in terms of their profit growth. We have here you can see a trend where certain sectors the prices have grown further to its profits, and for certain sectors the profits have not quite caught up with their for certain sectors prices have not caught up with their profit. One of those examples which can be seen is in banking sector, wherein the profit growth for last 5 years was at a 37% range. However, the price growth was only at a 13% range. So there is a high chance that prices would catch up to its profit, and there would be a massive revaluation which might happen to banking sector. This type of trend is also seen in financial sector as well as commodity sectors, where the profits have grown because of increasing prices, and the prices have been moved on to the end consumers. Now you can also see certain star marks adjacent to certain sectors. These are basically the highest moving sectors for the month of June when compared to May. So trading, automobile and abrasives are the only sectors which ended up positive in the month of June when compared to May, and all the other sectors were either flat or ended up at losses when compared to its May, the closing values in the month of May.
Yeah. So one thing what we can note across this slide is basically for the top 20 profit growth companies, it has been divided into 10 and 10, where the price growth of for few of the sectors are higher than the profit, and for the few of the sectors the profit is higher than the price. And however, for if we go towards the last 20, there's only one sector where the price growth has been less than the profit growth. However, for all rest of the sectors, what we are seeing, like in trading, what we have, the profit growth has been 4%, while the price growth has been 71%. I mean, that's a very huge differential what we are seeing for the last 5 years in that type of a sector. So this is what we have for the macro outlook and the market outlook for the month of June 2022. However, if you have any queries or any...
So just before we disconnect, just to summarize, on the macro side, the variables look like we've done much better this month relative to last month. When we look at the earnings of companies over the last 3 months, there's been a big uptick over there. Last month, the revenues of the companies grew by approximately 8%. Some of this would be because of inflation, and some of it would be because just the volumes have been increasing. And then if you go to the last slide, what we can note over here is that essentially in the last month, the prices of trading companies and automobile companies and abrasives, right? Those are the only three that were positive. The rest was negative. The second thing to note is if you'll see the top 20 sectors in terms of profit growth, they seem to be more, fairly valued relative to the bottom 20 sectors in terms of profit growth, which gives you an indication that there's a lot of speculation going out there. This could be one of the reasons why the index might outperform a lot of the mutual funds, because you're seeing sectors where there's no real growth in earnings get revalued upwards. Right? So what could happen in the future is those sectors where, because we've said that earnings and price in the long term sort of equal each other out, you could see the bottom 20 sectors underperform, and you could start seeing the top 20 sectors start to overperform. Right? I think that's it for this month. Should you have any questions, please, or you need any more data points, please feel free to reach out to us. You want to say anything else, Rishabh? Nothing.
So that's it from our end.
That's it.
Thank you.
Thank you. Take care.
Thank you.